So the market gaining a little bit of ground today, but it's still below that 4,000 resistance.
That's true, but we actually saw a rebound of most of the banking stocks. I think this was on the back of the positive results that came through from Barclays and Standard Chartered.
Let's talk about some of those results, starting with Barclays' release of first quarter results. Pre-tax profit is up, but interest income is low. Now, without specifically looking at Barclays, just giving us an indication of what to expect for the banks going forward, with inflation creeping through, with interest rates rising, we could see a waning demand for loans and advances, and it might lead to impairments later on when people have to pay very high costs for borrowing.
That's quite true, actually. What we saw last year was banks posted quite a high income. Especially, a lot of it came from higher interest income and also from fixed income trading, because the FX market was pretty stable last year. But coming into this year, where the fixed income market has been pretty quiet and rates seem to be shooting up every day, we expect interest income to be low, also trading income to be lower. So the banks will have to be looking at other sources of income in this financial year.
Okay, let's talk about how the bond markets may have bearing on income for banks and in general, because we know that a lot of bonds are sold to the banks as major institutional investors and over the counter through some of the banks. When we're starting to see bond yields rising and just risk sentiment starting to be pervasive, what's the broader bearing going forward?
Basically, what this means is, compared with 2010, where interest rates were sliding down from mid-2009, we shouldn't expect to see banks posting such high incomes, especially from trading fixed income securities. Banks are the major holders of fixed income securities. They hold about 53% of all issued government bonds. But going forward, banks will have to concentrate on other income streams, as it seems the fixed income stream has more or less dried up, especially with the rates moving up. We're seeing a lot of banks trying to exit longer positions and moving into shorter duration bonds.
What do you make of the depreciating shilling, Kenneth, reaching 86 shillings 77? I mean, yes, it's the inflationary pressures creeping through, and it doesn't seem to be any help that the CBK is in the market trying to mop up excess liquidity.
I think this is the lowest we've seen, where the shilling closed at 86.70, 86.80. So this is actually the lowest we've seen. It's a bit difficult to predict where the shilling can go from here, because we've never seen these levels before. And CBK has been coming to the market to buy up euros. It's not quite clear why, because looking, there's the credit facility they just got the other day from the IMF that should cover up our forex reserves. But they've been coming to the market, I think, for the last 3 weeks. Although every time they come into the market to pick up euros, they also do come to the market with a repo to sterilize the effect. This week, today, actually, they came in and picked about 1.5 billion shillings, the extra shillings that pumped into the market. But this seems to be still fueling inflation and still weakening the shilling further.
All right, let's talk about counters to watch. We've been talking about the banks. I just want you to comment on one other bank, KCB. We got an announcement today from the CEO, Martin Otieno, that the board has approved their transformation recommendations, and we're going to see a restructuring of the executive. Has that in any way had any positive impact on KCB?
Yes, we actually saw a rally on KCB towards the close of market. It's back up to 25, and it seems to be moving up. We expect to see more interest in the days going forward this week, actually.
Safaricom obviously will be releasing their results tomorrow. Lots of expectations for Safaricom. Many experts expect to see revenue growth somewhere in the region of 14%, but shareholders are very concerned. Impact of the pricing wars on the overall balance sheet, and whether the management has a growth plan going forward.
That is true, but the new CEO has come out clearly saying they're concentrating on their data as an income stream, because voice, which has been their major income stream, is, I mean, the returns from that are slowly dwindling. In fact, yesterday, there's a committee that had been put together by the Prime Minister to look at interconnection charges. They've actually come through and said that interconnection charges are going to come down yet again by almost 50%. This is going to be quite a hit on the voice stream of income stream. So going forward, I think Safaricom does have a strategy mostly concentrated towards data revenue.